Hello everyone, just a quick video for today, March 26th. It's Tuesday. I didn't do any SPY trading today. I'm still working on that other, basically reverse engineering another trader's entries and trying to see if I can find something to pick up on from that. Didn't go too well today. Yesterday was a good day. Today, I think all but one of the trades were losers for me. Ended up red today. Took small positions because I knew it was a little bit, I don't like following other traders, so it's more or less for testing. But here's a SPY chart. Now, in yesterday's video, you remember I mentioned about the gap that we had below us and how we closed just barely above it with a spinning top, and how I thought today would be a pretty good bounce to the upside. And we did see that. Even with this pullback the rest of the day, we still ended up closing. I think it was still above yesterday's close. We see yesterday's close is right here, and we still never touched that. So, that's still intact, and we're actually pretty back down, getting pretty close to that gap support again. So, maybe see something. I don't think we'll see something quite like tomorrow. It's quite like today, tomorrow, but nonetheless, we opened here and got a pretty good pop to the upside, and busted right through that. The R2 pivot, the R1's down here. We were already above it at the open. Came up here. I don't really see any. The only thing I see up here that I don't really see anything that really got close to as far as resistance that would have caused the stall out here. But whether there's something there or not, things just don't run forever. So just ran out of steam. That's kind of like a tweezer top. Tweezer top is when the tops of both the two candles or the bottom of two candles are really close together. They also call it a pincher top. When they're just about the same, there's usually a pretty good chance that you're going to see a reversal there. So we had that there. It's not a pattern I play, but it is something to be aware of. Came down, we stopped right at this R2 support level. It's technically it's an R2 pivot, which R2 is resistance, but once we broke above it, it became support. So you see we came down to that, and we kind of hung out there for a little bit. It's not something I would have played off of, but it come back down. A couple big candles here. You see this one has a long wick. Doesn't really coincide with anything else to indicate any kind of a pullback, but we came down here right to the 100 simple moving average line, and bounced off of that. Still nothing I would have entered on. However, this one here, we have a huge bearish engulfing candle here. A bearish engulfing candle fully encompasses the previous candle, but when it encompasses several candles, you see here we 1, 2, 3, 4, 5. We encompass 5 candles, the 5 previous candles with that one candle. I wouldn't normally like jumping into puts after a big huge red candle like this, but the fact that there's actually another name for this. I'll look that up in a second. But the fact that we encompassed 5 candles and we closed below the 100 simple moving average line, that probably wouldn't have been a bad entry. And you see it would have worked out. Played it all the way down to the support level. Let me check here. I'll tell you in a second what that pattern is. 3-line strike, I believe. Let me see. And you know, the funny thing is, when I did this before, I don't think this didn't show up in my video. There's a little box right here. There's a little box here that pops up. And when I watched the video back, it didn't show this box. And all it showed was my mouse moving around here. But anyway, if you click on the little question mark here beside the 3-line strike, you'll see it. It's a candle that encompasses several previous candles. We slide this down a little bit, we'll see that right here. Oops. Let me do that again, because now I lost it. There we go. We had, 4 out of those 5 are green candles, but we had up candles and then a big, huge red candle, which is exactly what this is. Other than that, one is red. So either way, that wouldn't have been a bad play for puts. We also see right here, we came up right to the 100 simple moving average line and had another bearish engulfing candle. You could have put an entry right here, because your risk reward on this, from a technical aspect, a stop out on a bearish engulfing is a close above the higher of these 2 candles. So you would have been, your stop out would have been a close above about 280.90, right? 80.90 roughly, 80.90, and your target would have been about right here at 80.27. So you figure out a 63, 64 cent trade, and your entry would have been right here at 74. So from 74 to 90, you have 16 cents. But from 74 down to 28, you have 45 cents. So it's almost a 3-to-1 risk reward there. So that would have been a good entry here. And look what happened. You could have played it down to here. You could have set a partial sell for this support level, the R1. Or you could have held it down to, this here was yesterday's high. Or we have the 200 simple moving average line. So you could have sold anywhere right in this range. And that's what I would have done. I probably would have sold some of it here. Actually, being as conservative as I am, I'd probably sell some of it at 10% win, and then would have sold some more here, and whatever was left I probably would have got rid of here. Maybe if held one, just to see if we get a pull down, further, but it would have depended on how many I was holding. So this here wouldn't have been too bad of a play, an entry for longs here for calls. You bounced right off a support level. The problem is your entry is going to be up here, or at a minimum. If you wanted to get a little bit more aggressive, your entry could be at the high of this candle, which was about 280.47. So let's say 280.50. When this candle crossed 280.50, which was about here, you could have entered. This isn't a bullish engulfing because the low was above the low of this candle, but it's close enough with that support level there, plus this one, and you also have one down here. And this one here is a pretty big one, the 200. That wouldn't have been too bad of an entry. You could have played calls off of that. So that's pretty much it. We had a bearish engulfing here, but my conservative play, there was, if we had some kind of resistance level here, yeah, I might have entered. I wouldn't have entered, so I wasn't watching SPY today, but that might have been an entry for me in normal conditions. But with no secondary resistance level here to play off of, I wouldn't have touched that. Same with this one. We did have, I guess you'd call this support way down here, the bottom of this candle. But then you look at your risk reward. This here, it might not have been a bad thing to play it off of here, because you have a bullish engulfing right here. your technical stop is down here at the bottom, a close below the bottom of this candle, but you see where we crossed over with that candle. That candle closed right about at this support level, support slash resistance. We closed just above it. So once we popped above that, that wouldn't have been a bad entry because you have a bullish engulfing. Even though you don't play it, as per the textbook. Textbook meaning you place your stop down here, but since you closed above this support level, you could have entered calls here and left this yesterday's high, a close below yesterday's high, as a stop out. Now if you would have done that, you would have got stopped out right here because this did actually close below yesterday's high. But it's so close of a, you would have entered right here, you would have only been down maybe 2 to 3%. I would have held in a little bit longer. I wouldn't have stopped out automatically just because it closed below that level if I'm only down 1 or 2, 3%. So, if you would have done that and held on to it, you could have played this out and had a nice little gain here, nice little winner at the end of the day. So, just because the playbooks, the textbooks say, okay, if you enter on a bullish engulfing, you have to stop out below, close below here. No, you don't. If that bullish engulfing happened to close and break a resistance level, that resistance level can act as your stop now. And since it's such a tight stop, because this resistance level was at what was it, at about 280.19. This close was at 280.19. So you could have entered right there, and you're not going to stop out if it hits 280.18. Even if it closes, this one closed at 280.17, this one closed at 280.15. You're not going to stop out over a 4-cent drop. So you could have, considered this your stop out range, and when it just didn't look good and you weren't comfortable with where you were at as far as your loss, then go ahead and get out. So that's how I would have played that today. As for tomorrow, I don't really know. I didn't really look at the daily yet. Let's take a look. Well, we got another spinning top today. Doesn't really mean anything either way. It just means that people are a little confused and not sure. And this would be a good time to show you what I do here. Today's close was 281.12. So I take my close and I change this to 281.12. And now that's already set for tomorrow. So when the market opens tomorrow, my purple line here for the close is already going to be there. So we don't have to worry about that now. The only thing I'll have to do in the morning now is move all of my pivot levels. And I won't know what those are till the morning, so I can't do that right now. So, as far as I'm concerned, this gap here is still in effect. Yeah, we broke below it here, but we didn't close below it. So as far as I'm concerned, this gap here is still in effect. To completely eliminate that gap, what's the high on this candle? 78.62. We need a close below 78.62 to eliminate that gap. And then at that point, we'd have a gap down here from this candle to this candle. There are no gaps to the upside, at least not up to this level. So, yeah, that's pretty much about it for. I don't see any resistance levels till we hit about here, right about the top of this candle, and I don't think that'll be a huge resistance. We'll have a little bit of resistance. This will be a little bit bigger, a little more resistance there. right now I think we're kind of in no man's land. This candle's almost identical to yesterday's. Didn't really accomplish anything other than a little bit of a higher close. If anything, I would probably say this is a little bit slightly more bullish than it is bearish, only because we made a higher close today than yesterday. Other than that, we had less volume. I don't really see too much reason to get too excited about this chart either way tomorrow. If I was forced to put money one way or the other, I'd probably go with calls, just because, like I said, today we closed higher than yesterday. That doesn't mean we'll be green tomorrow. Doesn't mean we won't gap higher tomorrow, gap up to 283 and close at 281. Can't really say. I mean, it's a little bit easier to read. I was pretty sure yesterday that with this candle, I was pretty sure we'd close higher today. I was pretty sure we'd have a green day, just because of the fact that this is at the bottom of a trend. We didn't know this was the bottom of a trend until today, but we had a big, huge, this is called capitulation. It's when you have a huge sell-off, and you see the volume. It was big, one of the biggest volume days in the past month. Huge red candle. That means pretty much everybody that wanted to get out got out. And you don't know for sure that's a capitulation candle, but having this support from this gap, along with a spinning top after a huge volume sell-off, I was pretty confident we'd have a bounce higher today. So, and we did, but I couldn't tell you tomorrow what's going to happen. I'm not as confident. I think we'll go higher, at least initially, at least right at the open. But from there, I don't really know. It could go either way. So, anyway, that's it for today. I traded some other stuff today. I think I traded EO or EA. Got beat up on that. Facebook got beat up on that. Wasn't a good day. Lost all the profits I made yesterday, and plus a little bit more. Following somebody else's trades. I'll give it a few more days. I'm going to follow them a few more days, probably the rest of the week, and see how it works out. This person has a pretty good track record, so what I'm trying to do is kind of reverse engineer what they're doing, and so far it looks like from what I've seen so far, it looks like they trade very similarly to me, other than the fact that I'm a lot more conservative. They make riskier entries than I do, but they get bigger gains than I do. They also get bigger losses than I do. So, and I'm looking to get bigger gains. That's what I'm looking to try to improve on. My gains right now are so small because I'm playing so conservative that percentage-wise they're so low that one loss wipes out a whole win, or maybe even two wins. So trying to get a little bit more percentage of my wins. So that's why I'm kind of looking outside the box to try to see what others are doing. And I'm just kind of, as far as I was down on those stocks today, on those entries today, I would have never let it go that low, that far away from me, if it was my trade. But I was following them, and yesterday it worked out. A couple of the trades were down more than I would have been comfortable with, but they came back, and I sold them and made profit. That didn't work out today, but that's what I want to see. I want to see if it works out in the end. If I'm further ahead, if I'm stopping out too soon, and turning potential winners into losers before they have the chance to run. Um, that's kind of what I'm trying to look at and work on. So either way, we'll see what we can do with it, and I'll see if I can take some of that and put it in my trading. So that's it for today. Comments, questions, suggestions, whatever, put them in the comment box, and continue trying to do these every day. I plan on, at some point in the next few years, I plan on being a full-time trader. So I'm going to be around for a while. I've been doing this for 5 years now, on and off for 5 years. So I'm going to be around a while. So subscribe, whatever you want, and we'll keep this going as long as we can. All right, thanks. Bye.